Hello, this is Mike Swanson, and you're watching this video most likely because you got an email from me telling you that it's up and we're at an interesting stock market moment. Now, if you're not on my email list, you're going to want to subscribe to it and get all my updates after today for sure. To do that, go in the description and you'll find a link to get on my free email list. Now, the Dow's dumping today, down 800 points. And I'm going to do something that may seem a little contradictory, but if you watch the video, you'll understand, and don't just zap out because I do something you don't like. First, I'm going to tell you the good news. Even though the Dow is down quite a bit today, I do think it can have a rally uh, after a selling day like this. Although I think, as I wrote in my update this morning, the odds that we're seeing an actual topping process or end to the rally that started last year after the big crash is very high. So high, in fact, that I sold half of my stocks, half my ETFs. I'm 50% in cash as of Friday in my main account. And I wrote a long blog post in detail explaining the reasons I thought the market was actually, likely to fall more than go up from now until, let's say, Thanksgiving. That said, we're so far down today that we're likely to get a bounce. In fact, we're still in earnings season, and I think we're likely to get some sort of rally or bounce into several key earning dates next week for several stocks that are still leaders in the market. The several big cap technology stocks. Think about Apple. Think about Microsoft. I'm going to write about this topic maybe tomorrow morning or Wednesday morning, but one or the other. But those are the things that can provide a reason to rally, people buying into those earnings reports. Obviously, they're not doing that today, but there's talk about several news stories trying to blame this on some of the virus news. In California and Las Vegas, they've advised people wear masks indoors, and cases are going up in many parts of the world. Vietnam just shut down much of their country, about 10% of it. Indonesia is exploding. It's, the places not vaccinated around the world are having a hard trouble. Africa's been having a hard trouble for quite some time. So this news is not a shock at all. It's not like suddenly this is big news today. You can't always look at news events to think that's the reason the market is going up or down. The reality is it's the market structure that's always the most important thing. And if we turn to the update I did today, this is the website, Wall Street Window, my website, and my update this morning is right here saying be cautious. And in these markets because the internals are fading. Yes, the S&P is doing better than most stocks, and the leadership is narrowing to fewer and fewer stocks. Did an interview with Ike Iusa about his money flow indicators early last week, and he was warning that they were showing weakness in the market, and the weakness is definitely materializing today. This is a good indicator of percentage of stocks above their 200-day moving average, and the S&P 500 is down below its April high, even though the S&P made a new high just last week. Cumulative volume is also fading despite the S&P having hit a new high recently. We're off the high now, but this indicator was warning of there's more selling than buying volume in the market, and there has been since May. Something that has not been the case since the market crashed in March, where there is a divergence between this indicator and the average, meaning this indicator is going down while the average was going up. That hasn't happened, you know, actually may not have happened since 2018. I'm not, but it hasn't happened at least since April. And it's a very significant thing. It's the biggest warning sign of an impending correction. And it suggests that the risks are to the upside. And this is what I wrote about this morning and suggested get out of more volatile stocks that are trading weaker than the market, and things that are not stocks but are extremely risky, such as cryptocurrencies. And one of the reasons the market can correct here is because so many people are fully invested or doing extremely risky things. I saw an article, well, Robinhood just filed for an IPO, and they've had to reveal information in their prospectus. Among that information is that over 40% of all trades that go through Robinhood are either for options or for cryptocurrencies. That shows you how risky people are being in the market, and high risk people in margin. That's gets real frothy, and you get corrections that you know, can happen as a result of that. So that's what it appears to be happening. No one can time these things 100%, and I am hopeful that we will get a bounce, or maybe call it a rally if you want. They'll definitely call it that on television. If it materializes, it could start at any moment, because the VIX is now above 32%. And typically when the VIX gets above 20%, you do get some temporary low. All that said, I'm not buying stocks today. I'm not trying to day trade. I'm not a day trader. I don't try to time things perfectly. I kind of look at an intermediate term basis, weeks, if not months out. And to me, what I described this morning wasn't a prediction that the Dow is going to go down 800 points. It was to suggest that we've had a tremendous rally since last April. And at this time, I think the risks are now that there's more downside than upside over the next couple of weeks. So therefore, I sold half, 50% cash basically. But that's going to, you know, eventually will change at some point. Now, here's what I'm going to do. It's going to cause a lot of people to stop watching this video. It's going to cause some people to email me in complete anger, because I'm going to do something that nobody will ever show you on YouTube. Right now, there has been a boom of people doing things on YouTube, showing you crypto accounts, showing you trading accounts, showing you Robinhood accounts, and on Twitter and on Facebook, bragging about their gains, making predictions of this is going to go up, buy this hot thing. And the thing is, these people never show you losses. They never tell you to sell. And they've been hyping people up, you know, for months. And this has caused some people to take trades they may not have done otherwise, to go on margin, to buy crypto coins that are complete garbage, and so forth. And it's just been a cesspool of hype. So what I'm going to do is something no one will show you them doing. This is my little Robinhood account, and it's down today 3%. And the S&P is down 2%. So I'm down more than the market today. And even though I think the market can bounce, I made a mistake in this account. While I sold half of my stocks at all my other accounts, I didn't in this Robinhood account, because I just honestly don't think about the account. I have it in order to mainly look at these lists down here to know what all the Robinhood people are trading it into, to counter them at some point. Not trying to do that today, but I was also thinking, look, I've divided this account up into 7 positions and talk with them about you, but I'm just not on top of it enough, and I forget about it. And the last one I bought is down 40%. It's like the worst trade I've made all year. Oh, it's down 46% from my entry point. So it's a disaster. And someone got real angry last week at me because I was saying that the market could be getting risky and ARK is bad and stuff like that. And they said, well, what are you going to say about your stock that you bought the other week? Well, I'm going to show you. I'm going to sell it. Because I want to cut losses. Well, it's not really about cutting losses. It's about doing something else. Sell all. So I got a loss. I sell on this position. And I'm doing this. This is contradictory because, or it appears to be contradictory because I'm doing this after I just told you. I think the market could bounce or rally, maybe even into next week. It could do it tomorrow. It could do it Wednesday. But I'm not trying to trade that on a short-term basis, the hourly or even daily swings of the market. I kind of move myself like a boat, real slow, or cruise ship. You know, I turn the wheel Friday and all my other accounts, but I didn't do it in this account. And before making this video, I was thinking what I was going to do is sell half the positions in this account, go to 50% cash, just to show you that it's time to reduce risks, and show you by example. I'm doing that. You know, at least I'm not telling you to sell today, but you know, I'm not your investment advisor. I'm just showing you what I'm doing in my Robinhood account. That was a stock I got as a reward. Let's see if we got any others. I think so. Look at this. They promote these crappy crypto things constantly on people. I don't want a crypto bonus. I mean, what is this crap? What is a crypto bonus? Earn a piece when you, I don't want crypto. Crypto is not something I want. So I've sold that one stock I just sold, that one share in it, doesn't matter. I want to sell more. So I'm going to sell. We have 7 main positions in the account. I'm going to sell at least 4 of them. That's what I'll do. Honestly, I could. Now, I own this in my main account. I'm not selling Pan American Silver in my main account. Did I sell it or not? I don't know if I actually want to sell it. Oh, this is confusing. It's hard to do these things while I'm talking to you live. Interesting, that one's trying to rally back up today. I'm actually considering going complete cash in this account because I'm just not on top of it the way I just don't, I forget about it. See, I'm not selling, I'm not selling these in my main account because that account's already 50% in cash. But this one's 100% invested, or it was a few moments ago. You know, I'm just going to sell everything in this account. And then because I don't want to think about it. The other accounts I got are much more important. And I'm going to do something else. Well, I shouldn't sell everything that people will misinterpret and think I'm really getting too bearish. Okay, we'll sell this one. I'm going to sell, I want to sell one more. ST&G is a shipping stock. I'll just sell that one. I do want to get to be like 50% in this account too. I'm not going to sell everything. I'm going to do something different. It's going to be more reflective. So this is going to really reflect what I'm doing in my main account still. So we've sold 3 out of 7, 2,300, 4,600. Okay, we're about 50% in this too, just like I am in my main account. So I'll still be managing this about the way I am my main account. So you'll be able to understand what I plan on doing and when I plan on buying back in and so forth. But I do plan on making some trades within the next 2 weeks, maybe next week, not today. I'm not trying to play a rally. I'm letting other people play a short-term rally that could last a few days, a week, or something like that. When I buy, I'm going to buy an expectation that the market's going to go up for months, not weeks. And there are some things that are holding up better than the stock market today. For example, if we look at gold, gold's going down 0.1%. So Monday, one of the messages I had Monday that I was trying to hammer home on people was, if you're in crypto, get out and get in gold. Move out of crypto and into gold. Why? Not because of some crazy prediction that the dollar is going to go to zero and gold will go up and crypto won't, even though they say it will. No, because as an asset, gold is less volatile than cryptocurrencies and less volatile than the stock market. So when the stock market does have corrections, gold falls less. In fact, if I was going to buy anything today, it would be gold, this GLD. In fact, maybe I should do that. Maybe I should sell a position, switch it into here, but I can't think and talk on the fly with you. And I can't trade and talk with you at the same time. I guess this is why people don't show themselves trading live too often, much less selling things, which I just did. So there goes half my YouTube audience, because people want to hear about buys, especially all the people that have gotten into the market and started trading for the first time in the past 10 months. Everyone is catering to the new traders who want to be hyped up and want to be encouraged to take huge risks. When I'm saying reduce your risks, get out of the most volatile things. Call options that were purchased a week ago are now worth zero. They just are going crashing in value. Crypto is bad. What's it doing today? I really have no idea. What is it? I hope it's up for people. That would be nice. What's crypto doing today? Dogecoin down 2.5, Bitcoin down 2.5, Bitcoin hanging on 30,000. That's a disaster if it breaks 30,000, because 30,000 has been like the hangnail it's been on, like 50 was in April, and then it cracked 50 in May, and there you go, leg down. And honestly, this thing's going to break 30. Hopefully it can bounce above 30 up to 32 or 33. If the market can go up for a couple of days or a week, then we can get Bitcoin up. And if you're listening, you can get out at a higher price. I want that to happen. I want it to go up. I want you to get out. If you're in it at a higher price than it is now, if you do that and then put that money into gold and just sit there and turn this crap off and don't look at it, you would be well off. You'd be a lot better off than all the people sitting in these crazy volatile collectible currency coins. So here's the thing. You just saw me sell something no one will show you ever. You know, they want to hype you up. They want to tell you trading is easy. They want to tell you don't have to think. You just buy a coin. You just buy the stock. You believe in Elon Musk and his nonsense, and you just do that. No, it's a lot harder than that. It's easy when you're at the very end of a bull market, and the silliest stuff works. And then one day comes or 1 week comes, and all of a sudden it stops working, and the game's over. And you got to adjust and adapt to that. Now, we saw signs of cracks in the market in April when so many fad stocks that were leaders last year, dominating the Robinhood top 100 list, typified by things such as the ARK ETF, the Buzz ETF, they collapsed or fell hard, 20% or more. And then when the S&P made a new rally and the NASDAQ made a new rally, almost all that stuff failed to make a new rally. And then it got smashed last week. And that's a sign of changing markets, you know. The biggest disconcerting thing in the entire stock market, quite honestly, is this. The 10-year Treasury bond broke 1.2% today, despite the fact that last week we found out that inflation is annualized at 5.4%. I mean, the 10-year bond is yielding 3% less than the rate of inflation. Most likely that means inflation, that rate's going to cool down a little bit. I don't think it's going to get below 2, but either way, you know, we're seeing money flow out of the stock market and into bonds today as a place to go. Money's going out of volatility and into stuff less volatile. Bonds, I don't believe, are great investments at all. When you have a time frame of more than a year, it might be a good investment for a week, but I'm not going to day trade bonds to try to, you know, make 0.1% off the yield dropping. But look, gold down 0.4%. Gold and treasury bond, gold actually is among the least volatile things in the entire markets. Gold is showing us today it is truly going to become a safe haven asset for the years to come, because it's acting as one today. Despite the massive selling pressure, gold is down fractionally. Gold stocks are getting hit, but they're stocks, they can get hit. You know, I own gold stocks. You saw some in the Robinhood account. You saw, I think I sold 2 in that Robinhood account that I still own in my main account. It's got, those positions are bigger than the entire Robinhood account you saw, you know. So we're in an interesting time. This is a time not to be despondent or scared. It's a time to pare back risks. It's a time to be calm. It's a time to watch the charts, the technical indicators. Don't get caught up too much in the news headlines. If there's people, you know, that just, it's time to like, it's going to be, I know this is going to be a busy time. It's not been that way for me when it comes to trading in recent weeks, in months, but this is where you get busy, because when markets make a turn, it can be a slow motion process. This is likely just part of a topping process. And, you know, we can, hopefully we'll bounce. We should. The VIX is up 24, up 31.5%. Odds are it will bounce tomorrow. If not, it's certainly by the end of this week. And then we got to see, we got to be on top of that. We got to see what's leading the bounce. Can that cumulative volume indicator go back up? How far down will the VIX go? What do things look like when stocks like Microsoft and Apple report earnings? How do they react to earnings? And then if the market doesn't act good, what do you want to do then? Do you want to sell more? Do you want to hedge? I'm probably going to not be selling more. I'm probably going to be hedging. That means, you know, puts or ETFs that short the market, or individual stocks. And there's a lot of them trading worse than the stock market averages. There's some combination of all those. And then you got to be on top of what holds up as the market goes down. or what even breaks away from the market and doesn't go down. It could be gold that breaks away from the market. So there's a lot of things now we got to pay attention to. The whole game has changed. It should really change months ago when ARK went boom, when so many Robinhood stocks got smashed. That was a sign the game was changing. Did Robinhood traders adapt to the game changing? Very few. Some will, because it's a learning process. You know, when you take hits from the market, you either learn that you don't completely know what you're doing, and you got to learn. That's if you're the new trader, or the market's. You learn that the market's telling you something, and that's what I think, or both. And I think the market is telling us something. You know, bonds are telling me something when yields are have gone back down this much. I was expecting yields to go down like a month ago. In fact, I bought the TLT ETF expecting yields to go down because it trades opposite to the 10-year treasury yield. And I sold that for a profit. I think it was early last week. I got out. I said, okay, it's up. It's gone up enough for me. I had no expectation it would fall this low. I didn't really care. I wasn't trying to time it exactly, but it's gone lower than it's gone super low. I mean, I'm just, whoa. I mean, it's a sign of money is fleeing into the treasury bond market, and corporate bonds are shot up. But is J&K up? No, J&K's down. High yield bonds are smashed. Another sign of money fleeing risk into safety. High yield junk bonds down, but high grade or low yield corporate bonds up. Investment grade up, junk down, treasury bond down. So the bond market showing the same characteristics of the stock market, out of risk in this perceived safety. This is the story of today. The VIX has gone up so much that we're likely to see this I don't want to see this appear to be temporary if we get a rally day or a few, but the risk is this sort of trading of risk off is likely to return after a bounce or a rally of I'm thinking a week, but we'll see. I can't predict it. You know that, and that fact that I can't predict it is why I sold those positions in my Robinhood account, because I think the overall risks are to the downside. I'm just looking for a short-term rally or bounce. So that's my thoughts for today. Doing this video, 3:45 is when I'm cutting it off, and I'll upload it instantly so you can get it as quickly as you can.